Yes, good morning.
Yes, sir. All right, I'm going to kick back and enjoy the show.
Yes. Good morning to you.
Okay, here we go.
Here we go. Okay, are you able to hear me?
Yes, sir.
Okay, I'm all set.
All right.
Okay. Good morning, listening audience. This is Everett James, your trusty tax reporter. I hope I'm coming in clear from the West Coast, where we broadcast every Wednesday at 10 a.m., and on the East Coast is 1 p.m. And I hope that the sound from the West Coast is reaching you.
You are fine. You're fine.
Okay? The subject is going to be similar to previous programs. That we first want to give out a continuing congratulations to the not-for-profit baseball team for 9 and 10-year-olds who have continued to distinguish themselves in local baseball competition. They competed in a tournament in Arizona and lost only by 1 run. Wow. So we're looking forward to you stepping forward and contributing whatever you can, either in the form of cash or, as in-kind contributions, which would include things, such as baseball cleats, baseball uniforms. Um, we also are looking for batting gloves, helmets, jerseys, anything of that nature. And of course, they would always appreciate some financial assistance, of course, in paying for the motels that they have to stay in. So that would always be highly appreciated. Their number, please take this down, 951 534 3838. Easy number to remember, 951 534 3838. And Cicely and Jason Wooten, Wooten. Keep them on your mind, folks. Okay, this is Everett James. You can reach me by contacting me at 951 and by email evjtax1 at gmail.com. Okay, folks, we are looking forward to your questions, which we will attempt to answer the very next program, the following week's program. So keep that in mind, and keep in mind that there will be a prize for some of those who participate, in a very demonstrative way. Okay, I'd like to, first, since many folks possibly, are still on from the left, are still complaining about ICE funding, and when it's really quite unusual that they're still complaining about that when ICE actually got funded way back in the 2025 tax funding stream called the One Big Beautiful Bill, which got passed already last year in July 4th. So they've already got their money. Why the Democrats are still complaining about that? Well, we haven't been able to figure that one out. The but they already have sufficient funds, and it seems as though there's a lot of other other I guess ironies in the situation that is causing the slow up or the delay in funding the ICE operations. The for folks who are have already completed their tax return for 2025, well, some of you may be finding that there are funds yet to be paid in the form of taxes due, and some are in such a situation that they're considering tax relief firms. Are they worth the money? Well, is it worth going even to a tax relief company? You know, the short answer is yes. Individuals will often find that it's a lot easier to work with companies if they have tax relief issues to deal with. The team will guide clients through the complicated tax relief process, including programs like the IRS Fresh Start program. That's a main program. The companies do have a team of licensed experts who have an in-depth understanding of just how the IRS works. If you're uncertain whether you need help from a tax relief company, you know, many of them offer a free initial consultation to assess your situation, your individual situation. During this consultation, they can point out which services you are eligible for, such as a Fresh Start program, and even do a financial analysis. If you do qualify for their service and choose to work with them, they will guide you from start to end for a definite certain fee. Make sure that they present a definite fee right at the beginning of the services. The essential part is finding a tax relief company that really fits your needs. You'll want to enlist the services of a trusted company and avoid dodgy firms that pop up as the season arrives. Now, although there are a lot of tax relief firms that can do the work for you, you know, there are certain companies that only make extravagant promises and then ask you to pay for services up front. But how do you find the best tax relief services? Well, some of the criteria are no 100% guarantee of resolving all of your tax issues. There's usually a team of licensed professionals, offers a free consultation. There's usually online customer reviews that you can go to and just get an idea what other people have experienced. Now, what about signs of scams? There are a good number of them out there. Well, here's some of the signs of a real scam. Failing to evaluate your tax and financial background. The second one, when it's promising they can get rid of all of those taxes that you owe. 3, trying to stall the case by requesting the same documents and not being transparent about the fees they charge. So, a lot of people feel their confidence decreasing once they face the complex and grueling process of dealing with taxes. This is just a natural reaction. There is reason professionals such as enrolled agents and certified public accountants and Fresh Start programs exist. These professionals understand and can stay on top of the rules that apply to your jurisdiction, so you don't have to deal with all of the stress. 21% of Americans owe some amount to the IRS based on data released by the Government Accounting Office, the GAO. These are taxes that were not paid on the year that they were due, whether in part or in full. Although tax relief does not magically eliminate the tax money you owe. You know, these types of services and programs, they really can lessen the burden by settling for a lower amount. There are different types of tax relief, including tax deductions, tax credits, and tax forgiveness. In essence, tax relief consists of programs that were designed to reduce one's tax bill, such as the IRS Fresh Start program. Just keep in mind, if you're in a bind because of your taxes, there are certain ways to obtain tax relief. I just mentioned some of those tax relief programs. As again, IRS Fresh Start program. You've got the IRS repayment plan, and that's one of the most common avenues. That allows you to split the total amount owed in the manageable payments and avoid garnishments and liens and levies. There will still be penalties and interest for late payments until the balance is actually completely paid. Now, the payment plan can be short or long-term. Short-term relief applies spans up to 120 days, while long-term plans go over 120 days. So the criteria there is 120 days or less is considered, or 4 months basically, are considered short-term, and those who go over 4 months, over 120 days, are long-term. Short-term plans, they go up to a maximum of $100,000 maximum in combined taxes, interest, and penalties. That's up to $100,000. Long-term plans, however, have fees, and the maximum is the maximum is $50,000, including combined taxes, interest, and penalty. So we can, go over those criteria again if you'd like. Let me know via email or by phone. How about offers and compromise? Very popular plan. That allows you to split the total amount really into very, very much smaller manageable payments and avoid garnishments and levies. There will, however, still be penalties and interest for late payments until the balance is completely paid. Okay, so the offer and compromise, that's a negotiation between IRS and an individual who struggles to pay their liability in full or will experience financial hardship in doing so. This is a very legitimate method to settle your tax delinquency for a reduced amount. There are certain factors that you've got to consider, such as your income, your ability to pay, and the equity that you have in your assets. So you have to make the required tax returns and estimated payments, plus an application to ensure that you meet eligibility requirements. You'll be asked to complete a Form 433A for individuals and a 433B for businesses, and also a Form 656 in addition to required documents. The Fresh Start guidelines can help determine if you actually qualify in the first place. What about penalty abatement? Well, the huge tax bill that you cannot afford to pay isn't the only trouble that you can run into. You'll also need to think about interest and penalty charges that are accumulated, which you will also need relief from. So Fresh Start programs may help eligible taxpayers reduce or eliminate these penalties. Penalty abatement is a type of relief particular to taxpayers who experience special situations that hinder their ability to pay taxes. These kind of situations, well, they can include hospitalization, natural disasters, a serious illness, or similar situations that are actually way beyond their control. The first-time penalty abatement, that's probably the most commonly available type of waiver. If you do have a good history of filing and a good history of paying taxes on time, and do not have a record of penalties, you may be qualified for that first-time penalty abatement. And that's where the IRS actually waives the penalty. Each day that you fail to pay your tax bill, a good amount of interest and fees is added to the unpaid amount. This is why qualifying for Fresh Start penalty relief is incredibly helpful. What are some of the advantages of tax relief companies? Well, American taxpayers will agree that facing the IRS is an intimidating thought, and it would truly be the last thing they'd want to happen. However, the complicated regulations for filing taxes, the changes each year, and the tax jargon, boy, that makes for a process that's pretty overwhelming for most Americans. Enlisting a tax service makes the process simpler and allows it to be understandable for the layman. So there are advantages that you can take from having an expert on your side. Tax experts can help prevent liens and levies by looking into the specifics of your IRS Fresh Start case. IRS uses asset seizure and wage garnishment to collect the majority of the taxes that they're owed, and those names, those names you do not want to hear. Wage garnishment and tax lien. The tax firms can help you look for an alternative method to help pay back your taxes, such as a Fresh Start program. Tax relief companies can also serve as a tax representative to negotiate with the IRS on your behalf. In addition to managing your current tax issue, they can help you avoid tax problems from arising in the future. So, the final word is, if you're looking for tax relief services, know that you're not alone, and that a lot of Americans are also looking for ways to relieve their tax burden. It's worth spending some time to research what options are actually available, whether it's an IRS repayment plan, an offer and compromise, Fresh Start program, penalty abatement, or other types of tax relief. So you can visit the IRS website to find information about the Fresh Start notices, penalties, and relief options. But you can also save time by going to a reputable tax relief firm to help you find the best route. Okay, what are some FAQ questions on the tax relief? Frequently asked questions. Well, what's the definition of tax relief? Ideally represents a policy or government initiative aimed to help businesses as well as individual people by decreasing taxes that they otherwise would have to pay. Can come in the form of a certain program for groups or as a government support identified program. The most important tax relief methods really are tax credits. That's when all deductions from a taxable income are made. A tax credit will further reduce the number of remaining taxes. Tax deductions. That's when you just reduce your taxes with the help of legal deductions.
see what happened. We have our home, and they are awful. Let's live in peace and help our brothers throughout the land. Give peace a chance. Open up your heart and let love shine. Let's get into with the universe. Big I know. Oh, it's not easy, but we must try to give peace a chance.
Yes, good afternoon.
All right, ladies and gentlemen. Hey, sorry,
folks.
we had technical issues, but we are back. Mr. Everything.
Yes. Oh,
All right.
yes. Okay. Sorry for that, folks. Looks like we've had a little error in the mechanics of our station. I was discussing with you if you had made a mistake, should you amend your return? Am I coming in clear? Yes, hello? Okay. Yes, yes. Are we coming in clear? Yes, hello?
Ev, you fine?
Yes, can you hear me?
Yes.
Okay, I can hear you. I'll go right ahead. Okay, folks, sorry for that. But we were talking about if you had made a mistake on your tax return, should you amend it? Well, in common life, is to retract an error even in the beginning is no easy task. The tax advisors say some clients fear that filing an amended return is tantamount to waving a red flag in front of auditors, tempting them to question every line. They would rather play the audit lottery and then pray they don't get caught. Others worry that trying to correct them, even relatively small errors, will be too much for the IRS's antiquated computer system to handle and could create even more problems. Well, what to do? A lot of that depends on just the details of each case, such as the size, the type, the number, and reasons for the errors. The process may appear relatively simple, but, folks, appearances can be deceiving, even in cases involving honest mistakes or new data. What might seem to be a simple change can ripple through the entire tax return and affect a lot of pages. Even so, most taxpayers really shouldn't be afraid at all to file an amended return. The reasons for amending vary widely. And some examples might be just forgetting to report a dividend or interest payment, neglecting to take advantage of various tax credits or deductions, or just receiving new information that they didn't have when they filed their original return. What might be the right answer for one taxpayer may be the wrong answer for another. So this has to be really individualized. How many people typically file amended returns? Well, Eric Smith, who is an IRS spokesperson, he says there are about 3.7 million amended returns filed on 1040X in the fiscal year that ended September 30th of 2015. Question: can I file an amended return electronically? No, you have to file the old-fashioned paper way. Keep that in mind. How quickly does the IRS handle amended returns? Well, not very quickly. Amended returns usually take up to 15 weeks or 16 weeks. 4 months, basically, folks. It can take up to 4 months to process and up to 3 weeks from the date of mailing to show up in our system. Wow. In a way, that sort of shows how many returns wind up being amended. Often, though, the process can take longer, much longer. Reported a special reporter. Should taxpayers bother filing routine math errors? Wow, IRS says it may correct mathematical or clerical errors on a return and may accept returns without certain required forms or schedule. Now, in those cases, there's no need to amend your return. However, IRS says do file an amended return if there's a change in your filing status, in your income, in your deductions or credits. Again, if there's a change in your filing status, your income, change in your deductions or credits, those 4 items, credits, deductions, income, or filing status, you do need to file a amended return. Now, suppose I want to fix mistakes on tax returns for more than 1 year. Can I do it all on one Form 1040X? Absolutely not. You have to file a separate 1040X for each and every year. The IRS wants you to mail each form in a separate envelope. Also, don't forget to check out any state filing requirements. IRS, says you need to include the year of the return that you actually are amending at the top of the 1040X. So whatever year you need to amend for, put that on the top, the actual year on the top of the 1040X. Okay, question. Can I fix just one error and ignore all my other mistakes? Again, the answer is no. If you file an amended return, you must correct all known mistakes. You can't just cherry pick what you want to fix. Question: are taxpayers required by law to file amended returns with the IRS to fix returns? Are they actually required to do that? That's something. The answer is no, according to Brian Scalatos, who's a tax lawyer at Castellanes. I can't pronounce it, but it's a LLP law firm in New York. Millions of people do anyway because they want to get it right with IRS, and because they hope that filing an amended return and paying any balance due will enable them to avoid any stiff penalties. Others who amend returns may qualify for a hefty refund or a credit, so keep that in mind. How far back in time can I go to claim a refund or credit on my federal return? Well, generally, you must file Form 1040 within 3 years, including extensions, after the date you filed your original return, or within 2 years after the date that you paid the tax. Okay, again, you've got to file that return, that 1040X, if you're going to, claim a refund or a credit. You've got to go back, and you can do it. You have to file that 1040X, within 3 years, including extensions, after the date you filed your original return, or within 2 years after the date that you actually paid the tax, whichever is the later of those two things, of those two occasions. Okay, there are exceptions, but we won't get into those now because there's enough exceptions in tax law that we discuss each week. What should I do if I want to come clean on something that could be construed as civil fraud? Wow. Wow. That's recent. Or even criminal, might be considered criminal wrongdoing. Also, what if my return is already being audited? Well, this can be very tricky, and it's really far too complex to delve into in this just short comments. In short, consider hiring a seasoned pro who specializes in these subjects. Remember that an amended return is an admission that your prior return was wrong. Some lawyers say taxpayers should not file an amended return if they've already been involved in a face-to-face IRS audit involving that return. In such case, it usually makes much more sense to speak to the agent about the issue rather than filing a 1040X. That's just some general advice. And lastly, will my chances of getting audited increase if I file an amended return? Well, probably yes. Several advisors say an IRS spokesman says he isn't aware of any statistics on the subject. So, folks, if you'd like to hear some additional comments on filing tax returns, the logic and the reasonable basis for doing amended returns, feel free to contact this broadcaster and let us know, and we'll dig further deep into it at the very next week's program. So, with that, let's take a look at the actual details of filing for the 2025 tax filing year. Well, filers certainly don't itemize as much as they used to. The number of 1040 forms with Schedule A attached just dropped tremendously for years following 2017. And that, of course, was thanks in part, a major part, to the Tax Cuts and Jobs Act of 2017. And that set up a $10,000 limitation on Schedule A write-offs for state and local taxes. And it really did nearly double the standard deduction amount. But those who should know the changes to itemizations in last July's One Big Beautiful Bill back on July 4th of 2025. Some of those beautiful changes took effect in 2025. Some took effect in 2026. So we'll take a look at three key changes now. First, the limitation on deducting state and local taxes on Schedule A. Wow, you have to have heard that now that maximum amount that you can deduct on Schedule A beginning in 2025 and going through 2029. Wow. So 25, 26, 27, 28, yes, and 29. Wow. And so going through those years, 25 through 2029, 25, 26, 27, 28, 29, 5 years, I suppose. That means that higher state and local tax limitation is $40,000. So after 2029, the limitation goes back. That's after 2029. But the limitation goes back to $10,000 unless Congress acts. The limitation for married couples who file a separate tax return is $20,000 apiece. So they just split that $20,000 in half. There is an income limit for 2025. The SALT, state and local income tax, that write-off begins to phase out, but not below $10,000. So for filers with modified adjusted gross incomes over $500,000, over $500,000, or and then there's income limit for folks who have over $500,000 for filers with modified adjusted gross incomes of over $500,000. If you're filing separate returns, you're married filing separate returns, that max that you can deduct if you're filing separately is $250,000. So the modified adjusted gross income limitation for married folks, $500,000, and for folks filing separate returns, $250,000. So there's a number of different modified adjusted gross income phase-out amounts, and I would, rather than mention those, I would rather just recommend that you contact your tax preparer to get more details before having to write down a bunch of limitations here without a complete explanation. So and keep in mind that the second big thing is charitable deductions that can be claimed if you're doing itemizations on Schedule A. They get a bit of a haircut. That starts with 2026 return filed next year. Meanwhile, the non-itemizers, those who do not itemize, they'll get a nice break for the charitable deductions beginning not this year, but next year, 2026. They can deduct $1,000 of charitable cash gifts without having to itemize on a Schedule A. If you're a joint filer, married filing joint, you can take a charitable deduction up to $2,000 if you're married without having to itemize. So gradually, a lot of these deductions are being extended and made available to folks who are not itemizing. Moving on to a different, slightly different subject, keep in mind that if you are the victim of a 2025 disaster, get to know the rules for deducting personal losses. Keep in mind that the loss must be suffered in a federally declared disaster. Your loss amount is actually equal to the smaller of the damaged property's adjusted basis or the decline in value. Okay, again, what is your loss amount? that what it is, that amounts to the smaller of these two figures, smaller of either the damaged properties adjusted basis or its decline in value. And then, of course, from that figure, you have to deduct any insurance proceeds that you received, or be very, very careful, or expect to be received in the future. And they really do. If it's could be reasonably expected to come in the future, I can guarantee IRS is going to hold you to, your feet to the fire on that. So, how do you actually, if you do have a disaster loss, how do you report that loss on your 2025 Form Schedule 1040? Well, first you have to use a Form 4684, I'm sorry, Form 4684 to calculate the loss. Then, if you're itemizing on Schedule A, transfer the amount to Schedule A, line 16, and then write net qualified disaster loss. If you are not itemizing, follow the Form 4684's instruction for line 15. Okay? And I'll be glad to repeat that for folks who may call in and want to get a repetition of the actual things that you have to do in such detail. Keep in mind, folks, that easy to miss tax credit, that does reward folks who are lower income people who put money in an IRA or a 401k or a 403b, SEP, or a similar plan. The maximum savers credit is $2,000 for joint filers and $1,000 for individual filers. They have a different incentive for these low-income retirement savers that begins in 2027, and the savers credit is then in 2027 is replaced with a 50% government match on up to $2,000 of pay-ins per person, and that is quite amazing. Know the rules, folks. If you're planning to claim the American Opportunity Tax Credit, it's worth up to $2,500 per student for each of the first 4 years of college, and I emphasize the first 4 years. It does not apply to years in graduate school, just to the first 4 years of college when you're still an undergraduate. Up to $1,000 is refundable. The American Opportunity Tax Credit, AOTC, as they abbreviate, is based on 100% of the first $2,000 spent on qualifying college expenses and 25% of the next $2,000 spent on college expenses. It starts to phase out at modified adjusted gross income over $160,000 for couples and over $80,000 for singles and head of households. So there's definitely phase out amounts. If you're single, it's $80,000, head of household, $80,000, and if you're married, for couples, phase out. It starts at $160,000. Okay, if you're also using the tax-free 529 funds to help pay for college, trying to coordinate that 529 education tax credit and the AOTC, the American Opportunity Tax Credit, that can be tricky. Because keep in mind, you cannot use the same college expenses for both of these benefits. I would certainly work closely with your tax preparer or CPA to make sure that you don't duplicate incorrectly. these tax breaks. Starting in 2026, filers taking the AOTC must have a Social Security number, and the college student must also have a valid Social Security number. So Social Security numbers become more and more, important to have, on your and have available to you for your tax filing. So keep that in mind. The tax courts, because of all of the fraud, particularly, evidenced by what happened in Minnesota, the tax court has okayed IRS revoking a number of nonprofit 501c3 exemptions. That group, that 501c3 exemption, that was created in 2001. That got fined. That group was created way back in 2001. So wow, here we are. It's been 25 years ago. And it was created originally to distribute powdered milk to kids in third world countries, and they got their exemption. IRS audited the organization in 2020, 20 years later approximately, and revoked this exemption after finding out that it was actually operating a cafe for profit and rented space for profit that it owned. But they were operating that cafe and using the building that it owned. They were renting that space out for profit, but they were in the sideline did not engage in any charitable activities. The court upheld the IRS's determination, saying the group does not exclusively operate for charitable purposes. And what was the name of that group? Milk's Saving Starving Children's Foundation. Wow. Isn't that something? Milk's Saving Starving Children's Foundation. Some tax pros, folks, before we close it out for this week, they are urging people to get IRS online individual accounts. It could make their tax dealings with IRS a lot simpler. What are some of the features? You can pay estimated taxes. You can access your tax transcripts and other records. You could view digital notices from IRS. You could check the status of your tax refund or file an amended return. You could make tax remittances. You could apply for a payment plan if you owe IRS back taxes and more. To create an online account, you're first gonna have to submit a photo of your government ID and a selfie or participate in a live video chat with a representative. And the name of that individual account is ID in caps, ID.me in small letters. That's ID in capital letters, dot ME in small letters. It might be interesting to some of Trump followers that to know that Mr. Trump is suing the Treasury Department and IRS for $10 billion in damages. And he's suing them in his capacity as a private citizen, not as president, but as a private citizen. The controversial case arose from unauthorized leaks of tax records relating to Trump and other high-profile figures by Charles Littlejohn, who's an employee with a management consultant firm, Booz Allen. And that Booz Allen firm, they had a government contract with IRS. Littlejohn, unfortunately, made unauthorized disclosures of information to the New York Times and ProPublica. Well, he has since pled guilty and is serving time in federal prison. Also, IRS ended all contracts with Booz Allen. The case raises interesting questions. Since Trump, as a private citizen, has filed suit against Treasury and IRS, government agencies that come under his purview as president. Some legal experts describe this as a conflict of interest, and in fact, 4 former tax officials have filed a brief with the court about this apparent conflict, but it's still needs to go on. Okay, folks, just some tax tips with our remaining time. Whose name goes first on your return? Does your tax return reveal more about your life than just your income? There's been a fascinating study suggests that the order of names on a joint return can reflect deeply seated social norms, political leanings, and even risk tolerance. Does your primary filer status say anything about you? And does the IRS care whose name goes first on the return? Wow. You can, I guess, discover and explore income streams. You can discover a simpler way to evaluate your retirement income options. And it's put out by Fisher, FISHER, their investment-free guide. It helps investors with $1 million or more and helps them to weigh the pros and cons of 7 income strategies. And it answers the question of what investment types will help you meet your goals: dividend-producing stocks, bonds, bond coupons, other investments, or a mix of several types. You can request your own copy of the definitive guide to retirement income to learn more about these investments while probing the ins and outs of real estate investment trusts, master limited partnerships, annuity, and more. So, folks, it looks like that we have finished this week's program. And please make your comments and questions to evjames, evjtax1 @gmail.com or 951-522-9877. Who knows? You may get a special bonus gift. So with that, we'll turn it over to William Brown.
All right. Thank you. Hey, man, we've got a listener from Uganda, Africa. Hey, you guys, music, how are you? Hey, thank you so much for tuning in. And please share that app. If you have your Android phone, just go to your Google Play Store and download Studio W. Apple, same thing. Go to your Apple App Store and download Studio W. Also available on the website, studiow.buzz, studiow.buzz around the globe. And come back tonight for Cultural Excellence with yours truly. Enjoy your Wednesday. Thanks, Ev.